Thursday, August 25th, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at whether a run on the fiat dollar is just getting underway. Yes, there's some very interesting data out of the Comex and LBMA, so we'll look into that. Before I start though, I'd like to give my opinion on what's happening in terms of the student loan forgiveness, the $10,000. And I'm going to refer back to history as well. There's a very interesting story about Davy Crockett. And Davy Crockett is known more for being at the Alamo, but he was also a congressman from Tennessee for 4 years. But yeah, I tweeted out yesterday, any kind of government bailout is wrong, be it student debt or the bailout of Wall Street in 2008 and 2020. Why 2020? Well, because they were bailed out again. They were in trouble ever since the summer of 2019 in the repo market. And yes, they were bailed out again through the Fed, through the Treasury. And even when the Fed helps these banks, indirectly, it's the taxpayer that is helping bail them out. And of course, in 2008, the Treasury bailed out AIG Financial Products, which was indirectly making Goldman Sachs whole for trades they did with AIG Financial Products, derivatives trades, always those derivatives, right? So I think any kind of bailout is wrong. So let's jump straight to Davy Crockett and the story of Farmer Bunce. And I'm going to put a link to the story below in the description. You can read the whole thing. I'm going to give you a very brief summary here of what it's about. Davy Crockett was campaigning for Congress one year, and he was going around the farms in Tennessee. This is back in the 1820s or 1830s, so it wasn't like he could fly or even take a train. So these were long journeys. And he got to Farmer Bunce, and Farmer Bunce basically said he was not going to vote for him again. And Davy Crockett was really surprised, and he asked him why. And this is what Farmer Bunce said, and I'll read it from this article. And he said, "No, Colonel, there's no mistake." Yeah, that's the no mistake about not wanting to vote for him. Though I live here in the backwoods and seldom go from home, I take the papers from Washington and read very carefully all the proceedings of Congress. My papers say that last winter you voted for a bill to appropriate $20,000 to some sufferers by a fire in Georgetown. Is that true? And Davy Crockett replied, "Certainly it is. And I thought that was the last vote which anybody in the world would have found fault with." And this is the reply from Farmer Bunce. "Well, Colonel, where do you find in the Constitution any authority to give away the public money in charity?" So there you go. That's my view on this subject, and it should apply not just to the United States, but I think any government in the world, be it the UK government. And I saw yesterday that Boris Johnson as well went to Ukraine for their Independence Day, whatever that means. And he's telling us that we should suffer from higher energy prices just to defend probably one of the most corrupt governments in Europe. Yes, that's the Zelensky government. So there you go. They're taking our public money as well, our taxpayer money, and giving it to Zelensky as charity. So that's wrong as well, what's going on there. So now back to the run on the fiat dollar. Notice that I didn't use the term a run on the dollar because as we we who know exactly what a dollar is know that what circulates today as a dollar is not really a dollar. So here's a real dollar, a silver dollar from 1888, a Morgan dollar, and I actually have a real gold dollar, and this one is a McKinley 1903 gold dollar. I think is one of the expositions. Which one was it? I forgot. Yeah, but anyway, there you go. There's a real dollar, gold dollar. There's a real silver dollar. And you can see why there's the 15-to-1 ratio. You got a dollar of gold there and a dollar of silver. So that's why I say a run on the fiat dollar, because the dollar, as John Exter said in 1972, after Nixon closed the gold window, or basically told its trading partners around the world that it would not convert $35 per every troy ounce anymore. That's what happened. It became an IOU nothing, as John Exter said. So what's that got to do with Comex, the Comex supplies coming out in silver and even in gold now? Well, I think that's a sign that people want real money. And that's what happened in 1971. They tried, of course, in the 60s to manipulate, to keep that price at $35. And they had the London Pool Agreement with other major treasuries from Western Europe and Japan to keep that price there at 35. But people realized that the real price in the markets, the world markets, was higher. So governments like the French government and others started demanding their physical gold because they knew it was worth a lot more than just 35. And I think that's what's happening now. People are realizing that they can get a lot more for their physical gold and silver out of the Comex, and because the premiums are so high. And it just goes to show that the price has been suppressed. And I've said many times, as long as people keep asking for physical, this game will end one day, and we'll see a true price discovery, or I like to say the true value of gold and silver in terms of purchasing power. And I don't know exactly what the price will be in terms of dollars or pounds, but it will be a much higher value in terms of real things, I would say. So there's a good article from yesterday on Zero Hedge. Gold and silver are disappearing from vaults worldwide. I'll put that in the description below. A link to that is from Quoth the Raven. He says, while you weren't paying attention, inventories of silver at the vaults of the LBMA, London Bullion Market Association, have continued a historic plunge. At the same time, China has been repatriating gold, which has also been flying off the Comex faster than it has in years. Things could be getting spicy for the metals markets. And then there's another one here, and this is from Rafi Farber, who a lot of you know, and a lot of you know that I have him once in a while on my Sunday live streams. And he also has a really good YouTube channel, which you should follow. It's Rafi Farber. I recommend you subscribe to it. But he has a newsletter as well, which if you're a trader and you look at markets very closely, I recommend this newsletter. It's the Endgame Investor on Seeking Alpha. I think he charges just over $200 a year, and he gives really good information, and he's covering that as well. This morning, I got a notice from him. It says over 500,000 gold ounces leave registry in 2 days. Silver flies out of LBMA. Deflation intensifies. What's he talking about, deflation here? We know prices are rising. Well, he's talking about the real deflation, and we've covered this before. He's looking at the 13-week average, a moving average of, 13-week average growth of M2, And he's noticed that every time that goes negative, you see a major financial event like a crash. That's what I guess the true definition of deflation is that money supply is shrinking. That's why I always say that the true definition of inflation is when money supply is rising. What we're getting now in rising consumer prices, just a consequence of past inflations. But yeah, so the thing about this deflation of M2 is that whenever this happens, there's a big crisis, and eventually the monetary authorities come in and pump the system again, and we'll see more M2 growth. I think in 1929 it happened. It happened in 1987. It happened in 2008, and it's happening now. So just to give you an idea. And Rafi as well talks about the flow out of Comex. And this is what he says. I know it is frustrating to see the metals stagnate like this and seem dead, but it is these obvious discounts that are causing the massive bleeding of silver at the LBMA and gold at the Comex. What does he mean by discount? Well, it's the discount of the paper price to the real physical price. These stockpiles are keeping the price suppressed, which is what they are designed to do. But they can only do this for so long before a slingshot. And that's what I've said. They can only do this as long as they have this physical supply, which they can leverage on and keep selling paper. But if people are demanding physical, that won't last for very long. Just like the London Gold Pool, which is actually an overt agreement. It wasn't covert. That didn't last very long, only for about 7-8 years. And eventually there was a slingshot from $35 to almost $900 towards the end of, in the beginning of, from the early 70s to 1980 exactly. So there you go. Let's look at where the markets are this morning. You may be wondering why Billy looks wet. Well, we've dried him. It's raining quite a bit today, and it's supposed to rain the whole day, which is good because we haven't had a rainy day like this for months. And so we went out for a walk, and Billy got wet. We dried him as much as possible, and we've got the wet dog smell, if you know what I mean. So it's 8:21 a.m. London time. Check out the markets. We've got spot gold at 1761. It's up about $10. High's been 63. The low's been just below 1750. So it looks like that level is going to be a support for the day. Silver is up 25 cents or 1.3% at 1935. High's been 40, a low 08. The Dow futures is up 233 or 0.75%. Nasdaq is future is up 1%. S&P 500 is up just under 1% at 41.78. The FTSE is up 0.7%, 75.24. Eurostoxx 50 is up 30 or 0.8%. So to the currencies, yeah, the currencies are picking up here a little bit. Sterling is up 0.4 at 118.50. The euro is up 0.4 as well, just above 1 now, 10011, the euro. The dollar is down 0.5% versus the yen, 136.50. Dollar is down 0.5% versus the Swiss franc, 96.25. And the dollar is down 0.33% versus the yuan at 685.26. The dollar is virtually unchanged. We're stuck around that 60 level versus the ruble. And we move over to the other currencies now. We've got Aussie dollar up 1%, actually 69.75. Dollar's down 0.4 versus the Canadian dollar, 129.12. And the Kiwi dollar is up 0.75% at 62.30. To the general commodities, WTI crude is up a third at 95.07. Brent crude is up 0.5% at about 101 right now. High grade copper is up 1% at 368. US nat gas is virtually unchanged at 930. Let's check the European nat gas, the Dutch TTF. Well, new all-time high here. We're trading at 312. It's up 7%. So no let up for Europe. It's not going to be a fun winter in terms of utility prices or, gas and electricity, I would say. So let's finish off with the bond market. Yesterday, the 10-year yield traded above that 270 level. Right now, it's down about 3 basis points, around 267. So we're testing that key level. And I think the tendency here is going to be for higher yields, and that's not going to help public finances nor the general public with their mortgage expenses, I would say. To the U.S. Treasury market, the 10-year yield is down about 2 basis points, around 309. The 2-year is at 337. That's down about 2 as well. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. And think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.